stock of the day. So we take a look at Credit Corp. That's a real barometer of the economy because they deal in distressed loan books, if you like. Posted half-year revenue 187 million lower than the 220 million recorded the year prior. Firm recorded a loss from ordinary activities after tax, which attributed to its lower profit figure, 12.1 million versus 31.8 million for the same period last year. Philip, what do you reckon of Credit Corp? Highly regarded in this sector, isn't it? In terms of they purchase loan books, don't they, and follow up.
Yeah, so they purchase distressed debt, so financial institutions lend, but they're not in the business of collecting money. So when there's a problem, they just sell their books for cents in the dollar to companies like Credit Corp, who goes about collecting them over a period of time because banks lend, but Credit Corp collects. So their profits come down to the quality of the books that are for sale, the value of the books that are for sale, and how much they pay for them. Because if they overpay and they can't collect, they dust a lot of money. So they took some write-downs, particularly in the US, because the market's not being flooded. The market's been excess supplied, and more books have come on. Prices have come down, so they've had to mark to market, and they've taken a loss. Conditions have been challenging in the US for them for quite a while. That's why I've been cautious on the stock. Australia's been doing well, but Australia, there's not a lot of supply coming on because the consumers are holding on okay.
Because they've only gone to the US in the last couple of years.
Yeah, and I mean, Aussie company challenging in the US, they've got a great business model, but they've got to get local staff.
Yep.
Right, so it's not, you can't just transport what you've done. You can transport the systems, but the people have to come from locally, and they've got to be skilled, and they cost more today than they did 2 years ago. So today's result was okay. It was not the growth company it used to be. Maybe that's only short term. If you look at what was pre-today's consensus valuation, it was pretty much fair value. So you don't need to be heroic on this stock. It's strongest years are probably behind it. It may well get cheaper before it gets more expensive. So I'm going to call it a hold. You wouldn't jump off the back of today's announcement, but it's not a must-own stock like perhaps it once was.
So you wouldn't sell out?
No, I'll just hang on for the long term. It was kind of neither here nor there.
Okay.
Yeah, it's not expensive.
Michael?
It's a good business, and it's one that we have held in the past, but it sort of fell into the too hard basket, around that COVID period. And it is a business that if you were an active trader, which we're not really, you could probably be active around, because every time the consumer gets called into question, whether it be COVID or more recently interest rates going up, and even going as far back as the GFC, this company gets absolutely smashed. People just think that all their debt ledgers that they've purchased, no one's going to be able to pay back their outstanding debits. But in reality, it's not like that. And Credit Corp's shown themselves to be very good and have a very good track record of acquiring these debt ledgers, 30 to 120 days in arrears at a big discount, and then basically chase up that money over time. And the big thing with this company is being able to buy these debt ledgers when no one else wants to. And the company will argue that they've done a lot of buying in the last 12 months. There's been a bit more of a supply. The competition for these debt ledgers has fallen away, which means they've been able to get more attractive pricing. And that was a big complaint that the company had for a few years there. So they would argue, although they've had to have a write down because the value of their debt ledgers has fallen, and in many ways it's like a bond. Interest rates go up, the value of the debt ledgers falls. But over time, if they can hold these things closer to maturity or collect a lot of the ledgers, the returns should be forthcoming in the next couple of years or so. Time will tell. It has had a bit of a recovery as the sort of outlook for interest rates has evolved in the last 6 to 12 months or so. But look, I'm happy to have it as a hold. I wouldn't have it as a buy, just because you want to start to see some of the benefits of the recent purchases start to flow through, and that hasn't happened just yet.
Okay. All right.